Welcome back, folks. All right, so I promised you I would review the trade example I showed on August 17th, 2020. And it was a 15-minute time frame, and I'm going to show you what you did not see in that recording, but what was the logic behind what I was doing and some of the ideas that led to my decision-making process. Now, clearly, it's a lot more to it, but this is way more than YouTube should see. Okay, so I do this to prove, number one, prowess, and also to offer you the other side of the coin, because YouTube is littered with quote-unquote institutional trading, smart money trading, okay, all these things, okay, that supposedly describe really just a watered-down approach and rehashing of what I've taught since 1996. But you don't see them actually executing. You don't see them proving that they can do this. They can talk about it in hindsight. They can show it on the left side of the chart. But they cannot execute. And they cannot do it consistently. And in this extreme, daily. In 1996, I started penning and teaching on a one-on-one basis individuals actual market making concepts. When I say market maker, I'm not talking about the dealer, okay, because there are people that have gotten a hold of my 1996 lecture notes and actually added all kinds of indicators, all kinds of conjectures and nonsense to mask where they got the basic information from, which was me in 1996. Because prior to 1996, you can't find it in print. You can't find it in VHS tapes. You can't find it in DVDs. It just didn't exist. And as upsetting as that may be for some of you, it really actually did start with me. Now, I give you these examples here on YouTube to offset the common snide remarks that people will say. You never see ICT trading. You never see him execute. You never see his entry. You never see him trade in management. You never see him take profit. You never see him do any of those types of things. And I can tell you that there are tens of thousands that watch me call these moves in detail before they happen. I outline the framework, the structure, the direction, where it's drawn to. I do this every single week. Now, my mentorship group is closed to new membership, but I have a large student base there that will, if we were all in the same room right now, and the new folks that are watching this video were in attendance, and I said, these are the things that I teach. Now, when I show you this, if it's the first time you're exposed to that, you're going to be floored. It's going to feel like hocus pocus. It's going to feel like hindsight trickery. It's going to feel like lipstick after the fact. Okay, and that's actually a compliment. When I show people my actual executions and management of trades, it's unsettling because it proves visibility, understanding, and authorship. That's the main thing and the only reason why I'm even here still. I'm proving that this stuff comes from me. When you hear traders talk about, I'm an algorithmic trader, I have an algo. Okay. You have an algo, which is a recipe or a process that tells you when to trade, when not to trade, when to get out of a trade, when to move a stop. That's fine. But your algo, your trading system, your method, and your tools and indicators mean nothing. Absolutely nothing in the grand scheme of things. What I see is how the price comes directly from the central bank. Period. What time of day it's going to do it, what day of the week it's going to do it, how it's going to deliver in about a 90% bracket. So again, if you've been trading for a while and you hear these statistics I'm throwing around, it's going to be like, okay, this guy's full of it. I get it. I understand. But again, I'm not going to convince every single one of you. And it's up to you to see whether or not there's any validity to this, because I'm actually showing you executions. I'm showing you management. I'm showing you now behind the scene, behind the curtain. I'm pulling it back and showing you one daily candle. One. Now I can sit down and do this every single day. Every single day. And if I do it, I'm going to have losses. But if I cherry pick the days that have all the signatures that I look for, I'm in a 90% bracket. I'm not trying to trade every single day, but I can see what's going to happen 90% of the time before it happens. I let a lot of these types of trading days go by because I have other things I want to do. As a developing student, or if you're new to trading, you're going to see this video and you're going to say, I want to do this every single day. And I'm going to tell you right away, you are decades away from being able to do this every single day. You're just not going to be able to do it. Not because I'm superhuman, it's just that you have so many things that you have to work through on an individual basis that you're going to self-destruct. You're not going to have the confidence to stay with it, to learn it. And there are a lot of moving parts. But in this YouTube channel, I have done my best to provide all of you that want to just spend a couple minutes each day here how to go in and fleece this market. And you can do it a few times a week and absolutely replace your job. If you lost your job recently, and I know a lot of you folks that have, it's going to get worse. And you need to have a skill set to be able to find a way to earn an income. Now, you're going to lose money doing this, but I firmly believe that if you learn this skill set, it's recession proof. It's bomb proof. It doesn't matter who's in the office. You can do this anywhere as long as you have an internet connection. If you have a very low hanging fruit approach, and it's exactly how I teach it, you can make this your individual business model. But you have to learn a lot, and you have to sacrifice a lot to get there. So hopefully, with that in mind, that's why I'm showing you this. And that's why I'm showing you these examples. Number one, to prove that I can trade. It does work. And there's nothing like it. So when you look at this chart here, it looks, if you're new, completely chaotic. It has no structure. It has no rhyme and reason as to why it's doing what it's doing. Why did it go up here? Why did it go down there? Why did it turn around there? Why did it stay sideways for a little while where it did? And then ultimately when it went up or down, what were the catalysts for that? 1992, I had all those same feelings too. Fast forward to 2020, that'll be 28 years, November 5th of this year, which we're not too far from. And I can tell you that when I look at candles now on a price chart, I see a whole lot more. And they're like well-read novels. I know the characters, I know the plot, I know the plot twists, and I know how it ends. Imagine reading a book 200, 300, 1,000 times. You know what's going to happen before you get to the next sentence, the next paragraph, the next chapter. You know it very well. If someone were to read a paragraph out of that novel, just a paragraph, and tell you nothing about it, right away you would know that's that book that I know, and this is the author. That's what these candlesticks tell me. It's a skill set that is transferable. You can learn it, but you have to submit to a lot of training and a lot of time. And for some of you, actually the majority of you, if I'm going to be honest, the majority of you aren't going to be willing to submit to the requirements to learn this, because there's a lot of moving parts. but you don't need every single moving part. You need certain components that are generic. That means time and price and profiling. When you understand those components and you match it with your unique personality, because all of us have a unique personality. Some of us are very quick thinkers, others are lethargic, and you procrastinate a lot. It doesn't mean that one individual is better than another or one personality is better than another. It just means that there are specific skill sets in trading that you're going to have to align yourself with to match that personality. Otherwise, you're going to have a whole lot of wasted time and money and frustration. I want you to take a look at this individual segment of price action. Now, I'm showing you a little bit of price in terms of a 5-minute chart, but I promise you, this is all you need. You only need one of these per week, and you don't need to have a job. Now, that, again, when you're new or if you're very critical in your thinking, it's going to sound like, this guy's selling pipe dreams. No, I'm saying that it's possible. I'm not promising everyone's going to be able to do it, but this is what I teach, and I'm able to do this. Now, just because I'm able to do it doesn't mean that you're able to do it. But I want you to think about what you see here in price. And if you're new, again, I'm going to walk you through this and explain how much detail is here, as much as I'm going to show on YouTube. Let's put it that way. But if you look at price from the 16th of August, and we transition from the 16th to the 17th, and then we trade all the way into the 118.80 level. That 118.80 level and the low formed at 4:30 on the 17th of August at around 118.28-ish, something like that. Let's see what that low was. Yeah, 128.8. So from this low to this high, if I were to tell you that that low and that high was predetermined before the trading day even began, most of you would shake your head and say there's no way. The Forex market's too big to be manipulated. It's too big to be controlled. That's what they'll tell you. And I'm here to tell you that's not true. I want you to think for a moment. Imagine the banks. Not your mom and pop bank, not where you have your auto loan or your mortgage for your home. I'm talking about the central banks. Federal Reserve, Bank of England, Bank of Japan, Bank of Australia. These storehouses are in control of their commodity. Their commodity is price. The currency of their economy is their commodity. People tend to forget that since it's their currency, it's their commodity, they are in control of the price. If they want the price to be lower, they'll reprice it lower. If they want the price higher, they'll reprice it higher. They're not in the business of asking permission if it needs to be done on a slow basis or sudden basis. If you think about what we've seen in recent years with the euro and Swissy, where it was depegged, go back and look at your charts and you'll see that central banks can do whatever they want to do. No one polices the central banks. No one. No one audits them. No one sets the rules and says you can and cannot do this. This is their playground. This is their storefront. So you have to submit to their rules and accept the punishment when you are wrong. Most of you aren't in a position to be able to do that because you'd like to see moving average crossovers, overbought and oversold indicators, harmonic patterns, supply and demand zones, Elliott waves. All these things the central bank has absolutely no respect for. Zero. None. Trend lines? Joke. Now right away I've sent some of you packing. And again, that's what I want. I want to weed through the individuals that really aren't here to learn. If you don't like what you've heard, obviously you can hit that thumbs down button. It ain't going to matter because it doesn't change the truth. But if you look at this price action here, I'm going to toggle the annotations. I'm going to walk you through this individual day on the 17th. I want you to watch this portion, and then when you're done, go back and watch the recording that I did on the trade example for the 17th of August in the euro dollar. Now, in that chart that you're watching tick and form, in that trade example, it's a 15-minute time frame. This chart, as you can see here, is a 5-minute chart. What I was trading was this 5-minute chart, but I was showing the candlesticks painting on a 15-minute time frame. So on another screen, everything that I'm going to show you here is salient as to why I was doing what I was doing on that 15-minute time frame. The structure of the day was seen on that 15-minute time frame. The details are what's going to be shown here on this 5-minute chart. So with that said, let me add the annotations and we'll start walking through this. What we're going to cover here are actual real market making concepts and actual institutional insights from its source, namely me. Now when I say that, I'm not saying institutional trading started with me. Okay, it's not what I'm saying. I'm saying that all the ideas around understanding how a retail trader can get in alignment with institutional trading, that started with me. That was in 1996. Nothing existed in print, nothing existed in DVD or VHS, because that's what we had back then. Blu-ray wasn't in existence yet. And no one was doing seminars or anything like that teaching what I have introduced to the trading community. And I can do what I claim. I can also sit in a court of law and do what you've seen me do on the 17th. And I can do that daily. That's why I'm able to do what I'm doing. That's why I make boastful claims. That's why I went on Instagram and challenged every single guru over there and said, if you can prove that you made $100,000 in trading in 2019 after taxes, I will pay you $1 million. Real money, real currency. I even showed the bank account. Not one person, not one, could do it. So the question is this: if everyone knows institutional trading and smart money concepts, why is it that none of them could do it? None of them show executions, management of a trade, none of them. It's easy. I did it. I'm going to do it every single week just to prove I can, and you can learn from these examples. But when you look at the idea of institutional trading, okay, there is altogether something different from just using buzzwords and then having the ability to do it. And that's what's lacking on YouTube. That's what's lacking on Instagram. All of these individuals that are out there pretending are actually doing harm not only to the viewers of their content, because it's really watered down versions of my stuff, or taught incorrectly. And that's harmful. Not only is it harmful to you if you're doing it, because by you trying to teach something you don't really understand or can do, you are subconsciously retaining the incorrect perception of what it is that I actually teach and do. So it's not a good thing to pretend that you know how to do this and teach, or even collect money from people for doing it, because that's unethical and frankly fraud. So I say that because I want you all as a community on YouTube to start holding these individuals a little bit more accountable. Because if they can say they know how to do it, then they'll be able to prove it publicly. It cost me no time, no money. It was no skin off my back to be able to do this example, just like it was no skin off my back last week to do it. It was no real effort on my part to run up the small accounts that you've seen me do in the past. I did it on Twitter. I did it on Instagram. And no one was able to do similar. I was accused of using an MT4 rented server. Well, here's what everybody uses now, the industry standard, TradingView. Now I'm here, and what I'm outlining here is the real brass tacks as to what I was doing on the 17th of August. So, in case you're misunderstanding me, I'm not here beating my chest. Okay, I really introduced myself openly in 2010 on Baby Pips. I stepped out and I said, my real name is Michael Joe Huddleston. I have been trading, at that time, 18 years. Everything that I did was with the intent of teaching the trading community what really goes on and how not to get hurt. Not promising you to get rich, but how not to get hurt, because the industry is plagued with misinformation, liars, frauds, pretenders, and they cannot prove they can do what they claim they can do. So I used to make fun of individuals that used to say, you don't ever prove you can trade. And it was fun for me because I know I can. And I know that these individuals that are asking me to do it all the time, they're not going to be convinced. Even if I do this every single day, they're not going to be convinced. So there's no point. But there is a time when real students that have an interest in learning how to do this, they need to see evidence that, number one, it works. Number one, it is as precise as I say it is. And that, yes, your teacher can do this. So I want you to have a different perspective, not only of me, but anyone else out there that claims to understand how to do this. They should be able to show you. Okay? And when I say that, I'm not saying a MyFX book, because you can set up a MT4 account with a rented server, make it look like it's a real account, and then link it to a MyFX book, and it would look 100% legit. But it's not. So I'm here working within the capacity of educating, giving illustrative examples, but doing it in a way where I'm not exposing myself to liability. So every example you see me showing you on TradingView, when you watch the trade examples, I'm actually using the paper trading application on TradingView, because everyone will understand that that example was a paper trade. It was not taken with live funds, and it's also not indicative of future results. So I want you to understand that. Be very, very clear in where we're going with this, because I'm not trying to entice you to believe that you should go out there and start trading with live funds. I absolutely am not a fan of that when you're a student. You're minimum a year away, period. If this is your first day being exposed to learning how to trade and real market maker concepts and institutional trading, you're not trading with live funds until at least a year from now. And that's your best case scenario. And right away, most of you are signing off right there. You might watch the video still, but you're signing off psychologically and emotionally. You're no longer committed, because that's too much time for you. And I can tell you right now, if that's how you're thinking, you're not going to make it here. Not here with me. You're not going to make it in the industry, because you're expecting fast money, and fast money doesn't exist on longevity. Not in trading, it doesn't. So have that in mind when we go through this. And like I said, I want you to appreciate the fact that I'm willing to do this, because I don't have to be here. I don't have to do this for free, but I'm doing it to be a contrast to those individuals that are on YouTube that claim they can do something that's really not true. They can't trade it. They can't do it. They don't know anything that's going to happen before it happens. They can only talk about it in hindsight. So proving authorship is what I'm here doing. This is mine. And I understand it because I authored it. I understand the algorithm because I authored it. I understand what price is going to do because I'm 3 decades almost into it. With all that said, and probably bored the socks off you, I won't need to say it again because it's in this YouTube video. So if you ever see individuals that are claiming institutional this, institutional that, smart money this, smart money that, SMT, relative equal highs, breakers, bullish order blocks, bearish order blocks, mitigation blocks, these are all buzzwords. You'll know my students by how they talk. The things that they talk about in the charts, you'll know they spent time with me. No one talks like us because I created that language. And there's been people out there that's been trying so very hard to come up with different terms and different ways of describing what I have introduced. And they can't, because I'm not done teaching it. And you have no idea, just because you think you understand an order block doesn't mean you understand order blocks. You don't. There's so much more to them. So I want you to understand that there's many more rabbit trails ahead that I can still go through on my YouTube channel and still have a ton of content with my private group in the mentorship. If you are interested, this way I can kind of like hold back the number of people that are sending me emails, because I'm getting inundated with them now. I will have one final enrollment for my mentorship in 2021. The enrollment process will begin very short window this time, January 3rd to January 10th, 2021. All right, so I will put a comment on the YouTube channel, on the community tab of my YouTube channel, and it'll say enrollments are now open. At that time, it will be a different email address, not innercircletrader@gmail.com. It'll be a different one, because I don't want you sending me the requests to join now, because I get too many emails as it is. But around the week of Christmas, I'll post the invitation with the email address that you'll send the interest in learning. If you want to join a mentorship at that time, that will be your last one, because I'm ending the teachings December 2021. I will have exhausted everything I wanted to teach at that time. The mentorship will still be open. I still will be interacting with the students, but on a more interactive basis, whereas I'm not so interactive right now. It's just you watch what videos I have and what lessons and commentaries I provide for that particular week. But other than that, we're just going to have a more intimate setting, whereas it's not so intimate now, because right now I have people in the mentorship at different stages of their development. So again, it sounds like a sales pitch. It's really just to help me manage my emails and also answer a blanket statement. Am I going to be able to get in the mentorship? Yes, you get one more opportunity, and then after that, we're done. All right, so let's take a look at the details here. Midnight on the 17th. Prior to that, we have previous day's low. So this is the lowest trading point on the 16th, and we transitioned into the New York midnight hour. At this moment, this is when all the banks come online and reset and peg the daily high and the low. Whether you want to believe it or not, that's really what goes on. At this moment, the highest high and the lowest low of the next 24 hours is going to be predetermined. Now, prior to me releasing evidence to this, no one believed that or even knew it was possible. But I prove it. And I have skills that will help you unlock that. It won't be an everyday occurrence, because everyday occurrence is enigma, and I don't teach that. That's for me and my family. But what I teach here, and much more deeper understanding of what it is I'm showing you here, that is mentorship. Mentorship is not a bunch of videos that have been made already and then you know everything. Because if that's true, everybody that's ever seen those videos would be able to do what I'm doing, and it's not true. It was just a way for me to get everyone on the same page. So you may be familiar with optimal trade entries. You may be familiar with the term of a bullish or bearish breaker, or mitigation, or vacuum block, or fair value gap. All those things, okay, they're all trademarks of mine, highlighting a specific component to price. How they all fit together, that's mentorship. And no one has all that. No one, not one charter member has that. Not one individual person but me. So it's very important you understand. There's a lot of people out there trying to rook people, sell them that they have the mentorship. They don't have. They have videos, but those videos are incomplete without me. I'm the decoder ring. I didn't just come up with mentorship and say, okay, I'm going to make some videos, and then it's a cookie cutter approach after that. No, you're going to need to have me decipher all this stuff. And that's what I'm going to be spending the rest of this year and 2021 doing. And then at that point, Hopefully I'll get my life back because I'm spending way too much time doing this. Knowing that the market has a predetermined high and low, if you don't believe that, just for a moment, just suspend that disbelief, just for the sake of our discussion. Imagine if it were true, then there should be things that repeat over and over again that would lead to the mechanism or illustrate evidence how that process is done. That's what I figured out in the 90s. I want you to see some of the components here, and I'm going to show you one daily schematic. This is what one daily range, in my understanding of how price is booked and delivered algorithmically. It's not randomness. It's not harmonic. It's not Elliott wave. It's not supply and demand. Okay? I want you to write this in your books. Okay? If you are here and you're serious about learning, you should be pausing the video periodically and writing down the things I'm saying. If you're not doing that, you're not learning. I promise you're not going to learn. Seeing it on my chart is not the same as knowing it, because you're going to need to go into your own chart and dress your chart just like this, and then put it into your study journal. And it'll mean much more to you next week, a month from now, a year from now, because it's the truth. But if you can dispel your disbelief and accept, for the sake of this discussion, that the high and the low is predetermined, imagine what opportunities open up to you. It's not the lottery anymore, is it? It's something that repeats over and over and over again. Now, there's going to be subtle nuances that shift in and out that may look a little different, but generally the underpinnings are the same. On the 17th of August, the market opens here in midnight. It continues into a small consolidation, trades just slightly above the 16th high, and then trades aggressively lower down into 4:30 a.m. New York time. It runs the previous day's low. Okay, resting below this is sell-side liquidity. What is sell-side liquidity? It's sell stops, orders to sell short on a break below that level. Once it goes below that, it purges that liquidity. So sell-side liquidity now has been purged here. For the sake of this discussion, we're going to assume that you would be viewing the market for the euro dollar to be bullish. In my personal and private group, we were bullish. We have been looking for higher prices. I prompted everyone that we should be seeing higher prices, not just 1880. But for the sake of this individual daily candle, I want to illustrate how I was operating within it. The previous low on the 16th is swept. When that is swept and the daily bias is bullish, this is no longer just a sweeping of stops, it's a purging of stops. Because sweeping stops can still be traded lower in this example here. Much in the same way, this high here, it's swept and then goes lower. But the daily candle is predetermined to be bullish. I'm not going to teach you that here, and already some of you are hissing and moaning about that. If you look at your daily chart, you can clearly see that the 17th and even the 18th are bullish days, or reasonably expected to be bullish days. So we're not looking at this down move and trying to short and try to hold for a down close on the daily candle. We're looking for an opportunity to go higher. So before it goes higher, it takes out the low here. It trades down below that, and because it sweeps that low and the bias is bullish, this is now a purging of sell-side liquidity. So in your notes, you want to make sure you have stop sweeps above an old high or below an old low. They can still be traded through at a later time. A purging of liquidity is in line with the daily bias. Daily bias for this day is bullish. Okay, so we trade below the previous low and it aggressively moves higher. Comes back down in, trades into the previous day's low again, and into a ICT bullish order block, which is this down close candle right here. Okay, that black candle right there. It trades down into it, and as it trades down into it, you can see me start the recording, and I go long on that basis because you don't see the annotations I'm showing you here, but on that 15-minute chart, this low I was trusting as the low of the day, and it was the low formed in London. So I'm working with a bias that's bullish. I'm trusting the fact that the London session created the low of the day. I'm not scared of buying when this starts dropping down. I'm not fearful that it's going to go lower than this low. I'm trusting the signatures that the Interbank algorithm provides me, because the algorithm that books price every single day is not changing its state. Its mode of delivery is always the same. It's reaching for liquidity. It's moving to a premium. It's moving to a discount, back and forth. All on a time delivery process. Everything is time and price. Nothing happens in the markets that is not directly linked to a specific time of the day or day of the week. The magnitude, okay, of how big these moves occur are based on the price level. So in the element of time and price, you anticipate moves relative to time. The magnitude of the move is linked directly to the price level. So the blending of both time and price gives you visibility. That's what I'm going to showcase here now. We trade down to the previous day's low again. Right below these relative equal lows, we have sell side liquidity. It's purged. It's not just swept, it's purged. Why is it purged? Because the daily bias is bullish. So any run on sell stops or sell side liquidity, that is a purging of liquidity. Once this happens, it should aggressively move higher. It breaks above these highs, trades up to this high here, and now at this time of the day, this is the New York session. This is the session that I taught on the YouTube channel with the recent Optimal Trade Entry Pattern Recognition series. Okay, so I gave you a specific element of time between 8:30 in the morning and 11. If you look at the beginning of this line here, it's 8:30, and at the end, 11. Okay, and it's all New York time. So if you are setting your trading view time to this, try not to use your local geographic time, like your local, whatever it is time-wise where you live and reside. Don't set your trading view to that. Okay, don't do that. You want to set it to this. Okay, New York time. If you do that, everything in your charts will be in alignment with how I teach and how the actual Interbank algorithm delivers. Okay, so IPTA, the Interbank Price Delivery Algorithm, that algorithm operates on New York time. If you're not a fan of America, it doesn't matter. It is what it is. All of them work on that same element of time. All right, so between 8:30 and 11, that's your New York session, and we have a high here, and prior to that high, we have this low. So this low and this high, this is your interbank dealing range. Your interbank dealing range high here, and your interbank dealing range low here. Now, why am I using this low and not, say, this low? Because once we start the 8 o'clock time window, all of the pre-news events that occur generally at 8:30 in the morning, all of those instruments start calibrating and anticipating price runs on the 8:30 news release. And I'll say that again. 8 o'clock in the morning to 8:30, in that 30-minute window, every instrument that's trading at that time, they all start calibrating. And what do I mean by that? They're setting up parameters that would, if it goes above a certain high, if it goes below a certain low, there's going to be liquidity above that. and how that works within the narrative of the daily range and its schematic, which is what we're outlining here. Again, in this idea, just think it's bullish. Now, if you're just watching this video and you didn't watch the video prior to this one, which was filmed and posted on August 17th, then this seems like a whole lot of hindsight. And I understand it. I probably would think the same thing, but I'm actually trading it. Okay, you can see me executing and managing it via TradingView. All right. Everything that's here is what was going on in my mind. What things I was looking at, what I was measuring, how I was working within the daily range. All these components is what I used. So we have a dealing range low here. This is the lowest low. Here's 810. So at 8 o'clock, that's this candle here. Its low is only here. At 810, we have this low. Okay, so you have to use that low for your dealing range low. So the interbank dealing range low is this low, and the interbank dealing range high is here. So this is the range that sets the stage for your New York session. Now, enter my ICT Optimal Trade Entry Pattern Recognition Series. If you're bullish, this is your range you're working within. So from this low to this high, you're waiting for it to retrace down into an optimal trade entry, which is the 62 to 79% retracement level. And that's what I'm highlighting here. Now you can put your own fib on your own chart relative to this candle's low and this candle's high, and you'll see this is exactly an optimal trade entry. The only reason why I have it like here is I want the chart to be a little bit less cluttered. Now in a moment, I'm going to add a fib just so you can see some measurements and how some market symmetry still exists in here. But you don't need the fib. Okay, the fib is just a way of providing a framework for new students. I don't sit down and put a Fibonacci on a chart before I take a trade. I use it to help illustrate to my students a range that is a premium or a discount, and simply meaning, are we overbought, oversold without the use of an overbought, oversold indicator. There is no indicators on my charts. All of these boxes and these annotations, you can actually download these from my website. Psych. You wanted it to be like that though, didn't you? Now, these are all hand-drawn. I'm old school. I don't really believe in the click and populate your chart with indicators and overlays. I don't like that. When I dress my charts up, it's more meaningful to me because it resonates more with me. I connect closer to the market when I do those types of things. And if you just want to press a button and populate a chart with all kinds of stuff, you might think to other people looking at you, you might, oh, yeah, he or she's high tech. You're really not paying that much attention to it. They become more of a distraction versus simply adding an annotation to the chart that's meaningful. So I'm annotating a time window, and in my mind when I'm watching the chart, I'm not looking at the chart with these annotations. I'm doing this for teaching purposes. I know what time I'm looking for a setup. But this dealing range low is outside of the New York 8:30 to 11 o'clock. That's fine. It does not matter because the element of time is 8 to 8:30. At 8 o'clock, all the calibrations start for that 8:30 in the morning news embargo. When that news embargo lifts, all the news starts flooding the marketplace. The algorithms are going to go start firing. This is your low, this is your high, and we start receding down into that range. That range is the high here and the low here. Trades down into optimal trade entry, and inside of this last up close candle prior to this low. So you have relative equal lows here and a high prior to that low being ran. So this low that took out liquidity here, this is a bullish breaker, this candle right here. That's what I'm annotating there. So take that range out in time and extend it in time. So we're trading down into that breaker, into this dealing range, into an optimal trade entry inside of a day that's bullish with relative equal highs that have yet to be traded to. Now, this run above is not a purging of buy-side liquidity. Why? Because the daily candle is expected to be bullish. So this is a sweeping on stops. Notice how the algorithm creates a high and then another high. So we have relative equal highs. They're going to want to come back up there and finish that unfinished business or Candyland. So traders are going to look at that as what? Retail resistance. That's a double top, baby. You can get short and hold for the lows down here to be taken out because guess what? Support's down here, so it's going to trade down there because that's how trading ranges work. And I fell for all that stuff too. Don't get upset with me. I believe that nonsense. The run to the 80 level. This is an institutional price level. What does that mean? Your 80 level, your 0.50 level, your 0.20 level, and your 0.00 levels are all institutional levels. Now, they are not the only institutional levels, but predominantly they're the ones, if you have them on your chart, you're going to see key turning points and targets being traded to at these levels. Now, above these relative equal highs, if we're bullish, and we are, reaching above these equal highs, if you look for an institutional price level, a 50 level or an 80 level or a 0.00 level, if you use that as a target, many times you're going to get really, really close to the daily high and the low. Again, it's not exactly at 80, it's not exactly at 50, it's not exactly at 20, but they are your general rules of thumb. As you can see, the high on this candle, we trade to a high of 118.80 and 9 pipettes. And in this candle here, again, 118.80 and 9 pipettes. So it just went a little bit above 1880, but not by much. And then we had a nice reaction here that retraces down into the price run here. Now, I'm not going to cover the 18th because that's not what I promised, but I promised that we would cover the 17th. Now, if we're bullish, we have a price structure for this low, the price high here prior to this run down, and clearing sell side liquidity, trading back to a bullish order block. Why did it go below this low? Because we've already taken sell side liquidity over here. So I'm not fearful of being a buyer here and afraid that it's going to take out this low and get my stop. Notice also, I'm not in a hurry to raise my stop either, because what I'm doing is I'm waiting for price to show me it wants to go higher. And as long as it's doing that and price is booking higher, the algorithm is doing what I think it's going to do. So I'm in alignment. I'm not offside. I'm in alignment with IPTA, the Interbank Price Delivery Algorithm. As it trades down to this level here, I'm waiting for it to launch. Watch the recording again on the 15-minute time frame. I draw out another green box because in that green box, this is what I'm looking at. And I absolutely nail it, and it runs, sends it up into the 118.80. Now, what's weird was, if you watch the recording, it was trading at 1880 a couple times. And for whatever reason, TradingView wouldn't let me out with that limit order. So I manually closed, and I'll show you the executions in a moment. But I want you to take a look at the price structure here. We have a low to high in this low in here. The volume of price structure swings are going to be better measured in the bodies. Now, there are times, and I teach this in mentorship, I'm not going to teach it here, times when we use the wicks of the candles and when we use the bodies of the candles. For this illustration, we don't need to worry about the differentiation between the body or the wick, okay? Everyone's familiar with this standard approach using the low to high, but I want you to trust the fact that there are reasons why we use the bodies, and it's the volume. If you use the bodies of the candles, this open and this close is the same price. Okay, let's double check myself here. 1856 and 3, and the open on this is 1856 and 3, yes. And then we have the bodies closed down here. So we have price trading down into, and yes, it trades beyond the 79 retracement level. That's fine, because I mentioned already the fib is not the secret. That's not what it is. I'm not entering always just on optimal trade entry. I'm looking for other factors. When we traded down into the order block, we reacted there, and by the time I got the TradingView window open and set up, we just started on this candle, and then I bought it. You can see the trade example yesterday where it was executed. With this price structure, we already know that relative equal highs, there's going to be buy-side liquidity. So the market should reach up to that level. Okay, fine. What level should it reach for? There's an institutional 80 level, 1880. Let me scrunch this down a little bit so you can see it. There you go. So we have 1880 above these relative equal highs, and we have one standard deviation of 118.80 and 1 pipette. See that? What's the high on this candle here? 1880 and 9 and 1880 and 9. So we were off by 8 pipettes with the fib, but still reaching for the 80 level. All right. So now all this discussion, okay, if I were to tell you all this stuff, this is based not to this degree, obviously, but back in 2010 through 12, when I was doing reviews of optimal trade entry setups and such, I didn't have this much details clearly. But when you see these videos, or if you were watching me back then, it probably felt like a whole lot of always looking at after the fact. Okay, and I can promise you, okay, everything that I was showing you back then was executed on before it happened. And I'm showing you evidences of it here. Now, it's one thing to see a chart that's marked up like this, and it looks real pretty. It looks textbook this, and it's textbook that. But experience is what is required for you to be able to understand how to execute within it. See, I can see what's about to happen on the right side of the chart. I can see it for about 3 days. Really, really tight, really, really precise. And I'm looking for signatures that will overlap to confirm those ideas. If I don't get them, or let me say it this way, if I don't have a number of them, what number? 3 to 5 specific signatures that I look for in the algorithmic price delivery, I won't take the trade. Now, I still might be right, but I'm not executing and engaging the market. So I see a lot of trades every single week that I'm just not a part of, but I could have been at any time. When you see examples like this, let me take this off. But anyway, the one standard deviation nails pretty much the high of the day, and this was the low of the day. Now, if I tell you I traded down here and went long, and I covered at 80 in a live account, how hard would it be for you to believe it? For some of you, it didn't happen. Okay, fine. If I tell you I bought down here on a live account and I got out of here on a live account, is it hard for you to believe me? For some of you, nope, it never happened. And that's fine. But what I want you to just appreciate here is all these points, all these things that I've shown you here, I want you to really take a look at this chart and recreate it in your own platform to the best of your ability. And then I want you to watch the 15-minute trade recap yesterday, where I'm actually engaging and executing and managing the stop and then taking partials off along the way. I want you to think about how that transpired with all of these things here. Okay, so what I'm going to show you now is no annotations, and I'm going to add the trade executions. Okay, here they are. Let me scrunch this back down. You can see the highest one up there. There you go. So again, I'm going to toggle them off so you can see them appear and disappear. See that? That's not me drawing arrows, Brian. That's execution, and it's proof of execution. Now, you're going to choke on the fact that it's not a live account, and that's fine. You're just going to have to accept it, because I'm not going to open myself up to liability, because I'm not licensed to give trade advice. What I'm doing here is illustrating prowess in reading price action. There's a stark contrast between that and live trading. As soon as I say trade with live funds and do this and do that, I am liable. I love all of you, but I don't love you that much. Okay, so when you see these things, okay, here's the execution, the buy, partial, partial, and finally collapsing it. Very close to the 80, huh? 1879 and 4 pipettes. So I was waiting for that limit move. You can see it in the recording. It just simply would not let me out at the 1880 level, but whatever. I collapsed it and it retraced. Now I'm going to leave these on here and add the annotations back, and you can appreciate everything that I've shown you here. That's what I was operating under. It's not a rented MT4, folks. It's not the replay tab over here. Okay, that stuff, this thing over here, that's not what this is. Play around with it. You'll see the candles in the recording I did yesterday, you can see they're expanding and contracting. Whereas if you use this playback feature, it's just the candle at completion. I don't need that. I can see the candles before they form. I don't need to use trickery. Okay. So if you've considered using me as a source of, number one, inspiration, two, learning, I want you to have confidence that I absolutely know what I'm talking about. I don't dance and jump through hoops for people that don't really have an interest in learning, but I have no problem proving that I can do this stuff. I just simply have to be careful about how I engage, because as soon as I start talking live funds, then I'm in a dangerous part of education. And I've already had a run-in with the Commodity Futures Trading Commission back in the 90s, and I don't want to deal with that again. So if that upsets you, if that bothers you, if it is a stumbling block where you just simply can't learn from me unless I give you live trades and a live account, I'm not your mentor. That's fine. But I'm 100% focused on your, number one, protection, my protection, and you're not going to learn with live funds. You're simply not going to. Not properly. You need, think about it like this. If you're going to go on an airplane trip to Greece, okay, and you're flying from the United States, do you want your pilot to be a pilot that just got in the seat the first time because he feels strongly that he's going to get you there safely? He's read a couple books, he's watched some YouTube videos, and he feels pretty adamant that he's ready to get you there safely and everyone else on board. I'm not going to feel so comfortable doing that. So you have to go through some degree of trial and error, and you don't want to discover that you're not good at landing in a crash landing situation with live funds, because generally you don't walk away from that. It's painful, and it's very hard to get the money to put back in the account. If you were like me, when I first started, I didn't have a whole lot of money. So you want to learn in an environment that, number one, doesn't punish you when you're wrong. Because if you are punished by being incorrect and you lose money, you are building a toxic perception of trading, and you don't really realize it. So when you see these people that say, yeah, you can only learn how to trade if you use a live account, even if it's peanuts and pennies, that's the way you do it. No, that's the way you go into trading live funds. You transition that way, but you don't start learning how to trade like that. You spend time, minimum 6 months, in some kind of paper trading or demo account setting, period. But you don't even do a demo or paper trading exercise or a regimen unless you have a well-written trading plan. What is the operation that you're following? What's the process? What's the model you're working within? Because if you don't have that in written format, what are you doing in a demo? You're playing in the sandbox, and that's not going to do anything to build you up. You're just going to get sand in your shorts, and it hurts. It's a lot of chafing. So you want to have all these uncomfortable experiences in an environment that is not going to hurt you, and also isn't going to have that much of an impact psychologically. Because if you lose money in a demo account, whatever. What did you do wrong? So that way you can go into it with the right frame of mind and say, okay, this is what I did wrong, and this is what I should glean from that. So that way you're not punishing yourself by losing funds. How hard is it for you to put $1,000 back in if you wipe out that account, or $5,000, or foolishly even more than that? Think about it. Right now, the world is struggling with holding on to their employment, and it's going to get worse. You need a skill set that's going to help you weather that. So you want to do it properly. Do it with learning conceptually. Then once you understand the concepts and you know what you're supposed to be doing with a particular model, then you spend 6 months demoing it. No live funds. Then if you're consistent after 6 months, then and only then would I think, not recommend, I think that if you put the smallest amount of money, such a small, minute amount of money that if you lost it, it wouldn't even feel like it was a problem. That's what you start with. And you do the smallest amount of trade units that you can put on there, deleveraged. Then slowly work up to that. And within the next 6 months, if you're consistently profitable and you're growing that up, then if it's something that you feel strongly about, then consider adding a little bit each week and treat it like a 401k plan. And then if you're able to work with a larger equity size as you start putting more into the account and you do it gradually, that's the proper way of doing it. But it's not what you want to hear, because it's not in those books. It's not in these courses. It's not these 20-year-olds trying to make trading courses when they've never been profitable in their life trading, ever. I'm one of two people, folks. I'm either the best friend you're ever going to have in this industry, or I'm the guy that stands in your way to collect the glory that you never deserved. Until next time, I wish you good luck and good trading.